All right. Get comfy because this is going to be a financial roller coaster. Just kidding.
It already has been.
I know. All right. So I just want to thank you all for joining us today for another edition of Meeting with Some Extraordinary Minds. We have Financial Edition, which I know is in the forefront of everybody's mind right now. Like, what should we do? Whether you're worried that you're going to lose your job, you've already lost your job, you're just kind of laid off for a little while. Everyone's in some kind of financial issue, some kind of financial situation that they're looking to professionals like you all to kind of get some advice. So we're hoping that we can shed some light on the current situation that we are living in. And hopefully it is temporary and it's just a season that we are going to kind of pull through like we have in the past. But I want to get started with introducing our panel here today. Joining us is Scott Dietrich. He's a financial advisor with Edward Jones. Give a little wave there, Scott.
Okay.
We have Samantha Slapnick. She is the owner of Liberty Tax in the area. Samantha, you didn't give me a real wave. And then we have Reid Mathews, an advisor with Berry Financial Group. Hey, Reid.
Hey, what's going on?
See, if things go south, you could be a waiver.
That's right.
And then we have, of course, our very own Richard Bishoff. He's our branch manager at Revolution Mortgage here in Myrtle Beach. Hey, Richard. All right, so I'm going to go ahead and ask the scariest question first. I'm actually going to throw this to you, Scott, first, but I want to get everybody's opinion. Do you think a recession is on our horizon?
Yeah, so what a question to start out with, Stephanie. So we're hitting this on a real positive note, which, so first off, to know and to understand that the unknown is what's giving a lot of fear out there right now, as far as people's households income, the market, people's own situation right now is something that is completely justifiable. And again, I think this is putting a lot of perspective just on folks with their own financial needs and cash flow and how they've been handling that. So, again, with the recession question, the good thing about the market before the coronavirus and before this pandemic is we came off of a record-breaking year in 2019. We started out 2020 in the same exact way. And again, before this, we had a very, very, very healthy consumer, right? We had very low unemployment rates. Again, GDP was probably growing about 2%. So again, the recession in the short term is likely right now. But again, going into it, being where we were before this, again, with a very healthy consumer, the rebound of it is likely to be a lot quicker than a slower rebound because of how healthy our economy and the consumer was going into this. So ultimately, with all the supply chains and everything kind of being put on hold here for a couple of months just because we're staying at home, we're doing social distancing, and things are kind of temporarily closed, ultimately that is, from a supply chain level, supply and demand, that is going to put a hold on things for a little bit, which will likely result in, a short-term recession here.
Anybody else want to tackle that question a little bit? I think Scott gave some really good points there. Yeah, go ahead, Samantha.
Well, I will say, just in the tax market, it was an interesting start to the year already. We saw a drop in our early season market, and that's typically lower income families that are expecting those big refunds. So earned income credit, additional child tax credit. And we saw drop-offs across the board that people are filing later. Really kind of an interesting thing, because the best thing about tax season, what I love the most, is that it's a very predictable business. This year has been anything but.
Right.
I mean, and it's crazy is that you think that people were, maybe they just felt like they were in a comfortable situation that they didn't have to run right in. Mm-hmm. Have you seen more people running in since this is all?
Yes, we'll probably touch on the stimulus thing here in a minute, but yes, so as soon as people heard that they had to file to get the check, I had people calling, I haven't filed this year. I haven't filed any year. What do I do? I need my money. And some people who haven't filed in years suddenly are like, oh, I'll file now. Even though I owe, or I need to do this, I want that check. Yep.
Yeah. Well, that makes sense. I mean, they're all looking to you. Everyone needs that little extra stimulus, and we will touch on that here in a little while. Reid or Richard, you guys want to interject at all?
I think Scott and Samantha did a great job answering that question. You know, a lot of the unknowns are definitely out and about, and especially with what Scott mentioned with the economy being so awesome for 2019. I mean, unbelievably awesome. And to see this just fear taking over, I think the unemployment ratio going as high as it will definitely have an effect, just with companies taking a slow period to get everybody going back in. Hopefully with the stimulus and people maintaining their jobs, we'll get this market and economy booming right back where it was.
Right. When you touched on that real quick, and I want to kind of talk about that. So Richard and Scott, I know you guys really watch the market closely. And I want to get your input on, do you think like the interest rates are going to go lower or, you know, even get into the negative?
Yeah.
Boy, I'll let you start with that one, Scott. Go ahead, brother.
Well, I think, Rich, I think I know where you're going to go with that, because I've been asked several times, does this mean mortgage rates are going to go lower? And what does this mean for refi? And obviously it's apples and oranges, right? But as far as the central bank, right, and what they're doing is essentially what they're doing. They're trying to stimulate the economy, right? So they lower interest rates in order to make it easier for business loans and things of that sort. And again, keeping, you know, cash flow. And the other thing that they're doing too is they're also buying assets as well. So that's another part of kind of the monetary policy there. But as far as, you know, rates going lower, you know, we see around the world that places like Japan and other countries, you know, they are in a sub-zero interest rate environment, a negative interest rate environment. And as far as the two reasons why we really don't think that we're going to go lower or be in a negative interest rate environment is because we don't see evidence of that really working with other economies, number one. And number two, again, our central bank, the Federal Reserve, has other resources to be able to, again, get cash flowing in the economy.
Yeah, I agree with what he said. I definitely don't see them going the negative or zero, but I mean, they're already at historic lows. So if someone's looking to purchase a house, I wouldn't really let rate be an issue right now. I think what we see is a lot of people just wanting to hold off through this uncertainty. You know, they're like, okay, well, I want to buy a house, but I don't have to buy a house right now. I'm going to wait 3 months, or I'm going to wait however long. So we see a lot of that. But if someone's wanting to buy a house and they have a secure, firm job, the interest rates are still at historic lows. I mean, we just locked one yesterday, you know, in the low threes. So, you know, 15 years, some people are getting in the high twos. I mean, that's crazy and, you know, not unheard of, but pretty much unheard of for a lot of people's lifetime. So interest rates, you know, a lot of that typically has to do with the market, up and down, but with everything so uncertain now, they're probably going to maintain around where they're at. They bounce up and down daily, but they're going to kind of maintain where they're at. But I mean, I do wish we had a crystal ball, because then, you know, then I'd be sitting in a pretty good situation right now. But like Scott said earlier about there's you got the 8 ball. Well, I haven't seen one of those in forever. But like Scott said earlier, you know, we're going through a different time right now than the 2007, 8, 9 recession. You know, that we weren't going to bounce out of that fast. Like with something like this, we could bounce back quick. We don't know, but we could bounce back much quicker, and will most likely bounce back much quicker. So it's not that I think a lot of the pause is just the uncertainty. As soon as that uncertainty is over or slowly clears up, then I think we'll bounce back pretty quick.
Yeah, I mean, Scott just went through this. I mean, he sold his house and was able to kind of keep it moving through. We have other friends that are selling and buying and stuff like that. So I think that, I mean, what you're touching on is right. We talked about this a week ago, is that if you're ready and you're still in a position to keep moving forward with that, because you still can, which is great. So with the market kind of slumping and going back and forth, you think that slump will last, or will it just, you know, it should bounce back here hopefully soon?
Yeah, I mean, from a housing market, I think it will bounce back rather quickly as long as people's jobs bounce back. You know, a lot of people who are in the service industry or in the restaurant business, or even if it's in real estate sales or timeshare sales, a lot of stuff we see here, you know, Once those companies feel secure enough to hire people back, or people who are laid off come back to work, and then the market's going to jump back up. So, I mean, from the housing market, I mean, as soon as the overall market settles, then we'll see the housing market jump back up. I mean, we're in a different area here where a lot of people buying second homes or investment properties. And since people can't fly down and see the house, or they can't do so, that's going to slow down. It is what it is. But I do think it's super temporary. I think that in the, late summer, early fall, we'll look back and be like, man, that was just a blip. But in the midst of it, it was crazy. I don't want to put a timeline on it and say it's the end of summer or late fall, but I feel like, in the not too far future, we'll look back and be like, man, it was crazy, but it wasn't as crazy looking from the outset of it.
Right. Yeah. And I mean, I feel that. I mean, I know Scott and I have talked about this, like how volatile the market can be and how you're kind of following it and, have some really good days and bad days, but I don't want to get too much into politics, but whether you love our administration or you don't, Scott, can you touch on this a little bit? How much is like the politics and what they're saying, and when the president speaks, how much does that affect our market? What should the general public know about when they hear something on TV, hear our president speak, or someone speaking about what's going on, and then it correlates to the market and what's happening?
Yeah, so that's been really interesting, right? Whenever we see the administration or anything of that sort speak publicly about anything that's going on, it's been really interesting to see what that does to the market and how quick the market reacts to that. And if anything, that solidifies that the market is just a forward projection of emotions and fears, right? And so with that being said, and this is not going to be a surprise to anybody, research shows that consumers tend to have more confidence about the economy when their preferred party is in office, right? So with that being said, and I tell everybody this, when you are looking at that long term, whether it's blue, red, whether whatever you believe there, when you are investing for the long term, we know that typically it's not going to matter. And again, temporary is such a relative term, right? Especially in today's, right, what's going on right now. Temporary, I have 4 kids at home, so temporary is a very, very long minute, hour, day, right? And when it comes to investments, and it comes to goals and retirement, to say temporary, and I say that all the time to all of our relationships here, but I also understand that, we're living in a time with a lot of fear and a lot of emotion, and a lot of unknown. And I think the biggest thing that we need to do right now is separate the two, is just say, hey, yeah, there is a lot of unknown that's out there with the coronavirus and things are going on there. But again, when we look at kind of the macro level and we look at the economy and the market, we've been through this before, right? I'm not talking about the pandemic, the coronavirus itself, but I'm just talking about the market cycle, whether it be housing or the economy or anything of that sort. And we've been through presidential elections, right? 78% of the presidential elections years since 1947, the economy and the market, or the market itself, has been positive. So I know it feels like we're in a time where there's a lot of separation, but what we shouldn't allow that to do is allow us to make decisions on our long-term goals, what we think is going to happen in the next 4 years, right? So yeah, there is a lot of opinion out there and things of that sort, but hopefully we don't follow too many irrational people right now off the cliff with some of that stuff that's going on. So I think just being able to be aware of it, that's a great thing, but also just knowing too that in the long term, it's not something that has a major impact on a diversified portfolio.
Yeah, that's great advice, because you don't want anyone just quickly being like, oh my goodness, everything's down, and you get into this slump, and then almost, we've talked about it before, like depression sets in and it creates the one problem into 30, because you're trying to figure out what you're going to do in your future when you can't really rely on the current state to know how your future is going to be. So speaking a little bit into, our current state, we've touched on stimulus packages and what's going to be going out. And Samantha, I'm going to throw this over to you, because we want to know a little bit about, kind of just, you can start quickly into like the taxes side of things and the deferment that we're asking, like, what are some things that we need to be doing? What don't we need to do? And then in order for that stimulus to come in and kick in.
Yep. So absolutely. So tax season is extended through July 15th. So that's for all individual and business tax returns that had already not been due and payments. So you don't need to file anything. You have that time frame until July 15th without any extension. If you do file an extension, it's good until October 15th. They've not extended that 6 months beyond, but just still to that October 15th deadline. So that means you also have more time, and that'll be for our investment guys to put into IRAs still to that July 15th deadline too. So that's good things for those that, may be able to take advantage of some of the kind of the other adjustments or things to lower your tax liability. As far as checks go, that's been the biggest questions that we've been getting. So yes, they are sending out checks. We don't know when. I anticipate it's going to take a couple weeks because they've already gone back and forth even this week on that. For individuals, it's $1,200 up to $75,000 in income. At that point, it starts to phase out. It'll completely phase out per individual at $99,000. It's just doubled for married filing jointly. So at $150, it'll start to phase out. $198, it'll completely phase out. You won't be eligible for anything. Those that with children, they'll receive an additional $500 if they qualify per child under 17. So that's been the biggest question we've had too. What about my kid who's in high school or in college? Am I going to get anything for them? And the answer is no, sorry. And if they're claimed as a dependent, they also don't get anything either. So for that, 18 or 17 to 22 market where they're claimed still, not good news for them, but kind of is what it is. Big news last night, the Treasury Department announced that Social Security only income people who are not required to file Social Security and Social Security disability, they will not have to file a simple tax return. The IRS had announced on Monday that they would. There was a lot of pushback on that. And I'm very, very thankful that they're not making all of these seniors go out and then come file a tax return just to get this check. They're going to base that on Social Security enrollment already.
Well, that's great. Because you don't want them worrying about running out and filing. I was like, you want to keep that generation as home as possible. We had a little, my grandparents went out to vote. And my whole family was like, no. So if they knew that they needed to go out to, to file to this, they would be like, oh, well, let's just go to the tax office. And like, no, stay where you are. So that was great news that you don't need to do that. So we talked a little bit about, kind of the past market, our current situation. I want to talk a little bit about the future. So Reid, Scott, I know you guys both work with retirement planning. So I want to ask you guys, some of the features that are, coming up that could impact your retirement planning. And then we can even touch on the CARE Act that has been in state. I was like, Reid, if you want to start with that, I'm kind of what should a lot of people that are kind of even nearing retirement or, planning for it, what should their mindset be?
Yeah, that's a great question. I love what Scott said earlier. Over time, markets typically perform well. I mean, if you got a long-term period, our average age client is 65 plus. So we're helping people reduce that risk exposure because a lot of them don't actually have the time, because typically it takes anywhere from 4 to 7 years maybe to really rebound from a major drop. Now that's of course dependent on the economy, and hopefully it doesn't take near that to get back now. So hopefully the markets come back soon. For the people nearing retirement, I definitely think it's going to be more difficult. You'll see a lot of people have to work a year or two longer. If the market drops 35%, which it has, if it doesn't come back as soon and they're, a year or two away, they just lost a good portion of their portfolio. So we typically try to steer people towards safer alternatives when they're a few years out. What's a good thing about people that are retired now for 2020, they will not have to take out their required minimum distribution. Mm-hmm. That's a big deal. We don't know what that's going to look like with all these institutions for people that have already taken it out in January and February. But I think the government's trying to help people not have to take that out this year, because if the market's down and it's all in the market, they'll have to sell those positions to take that money out. So hopefully they'll be able to not take that out this year and then let it rebound when it officially comes.
Scott, you want to touch on, the clients that you're talking to, kind of what are their feelings? I mean, what are they asking you?
Yeah. So, and again, it goes to look at the overall picture of everybody's situation, right? And so there are a lot of different, what am I trying to say? Just ways to be able to make sure that even throughout market cycles like this, to make sure that you're in the right place and taken care of, and have enough of the income stream that you need to have close to and throughout retirement, right? That's the biggest thing. That is a huge transition for people. Their entire life they have they're putting away into their retirement, and then they're going to switch to getting paychecks, from that. And so making sure that you have an aspect of your portfolio or of your picture in safer alternatives, or whether it's in a diversified portfolio. I think this is a really, really, really great time for folks to be able to take a step back and make sure that each bucket of their necessities are filled up, right? You got to have an emergency savings account. You got to have I believe a backup to that for times like this. And then you have your long-term investments and your retirement accounts and a diversified portfolio. The biggest thing is, again, we know that times like this in the market are going to happen. They've happened before. They're happening right now. And I promise you, if you're around the next, 5-10 years, you're going to see it happen again. History tells us that. And so it is about making sure that you're plan for times like this. Make sure you're having discussions with an advisor or somebody that is able to guide you in times like this, so not to react to this, but to be able to say, okay, we've planned for this. Okay, I know what my income needs are and know where it's coming from. And again, not just not making reactionary kind of decisions during times like this. Again, I heard that this is great. This is from Art Laughter. No one ever makes wise decisions when you're drunk or when you're panicked, right? And so a lot of people right now are probably the other one, but a lot of people are panicked, right? So again, but the biggest thing is it's the same thing when I have a relationship that has a relative pass away, or something of that sort, or somebody close to them. I tell them, don't make any decisions in the next 6 months, right? Because your mind and the state of where you're at, you're not in the right place. Now, certainly if somebody's not sleeping at night, things have to be changed without a doubt, 100%, right? It's about quality of life. But what we never want to do is derail somebody's long-term goals, with kind of this temporary, this short-term market volatility.
Go ahead, Samantha.
I was going to say, and it really depends on kind of what your priorities are. I mean, I'm younger, so retirement isn't next week. I wish it was, but that's okay. So what we looked at, I was really kind of excited when the market did go down, which is terrible, because I need to make my IRA contributions for last year. I'm like, now is a great time to put some money into my IRA, because it will grow. When it does grow, it's going to grow exponentially at that point, because it will come back. And we have some funds that we could put into the market. And I was kind of excited about that. So, if you've got that flexibility and you have that cash available that you can do that, it's about seeing beyond just right now what's scary and all the red, because it will. And I'm not the investment guru that Scott is, but and Reid, but I'll tell you, I very much think that we'll get through this. It's just, we have to be patient. We've seen worse even in the last 10 years.
Right. Yeah. And I think that, we talked a little bit about it, but everyone's home. Most people are home now, and they're not out spending. So I think a lot of people are looking at their finances now. Like, I'm not, running out to Starbucks and grabbing coffee every day. We're not, having lunches out. We're, spending a lot more time in the house cooking here. We all try to do our best to get out and get some takeout to help support the restaurants, but you're really not spending that money. So you can really take a deep dive into your finances while you're in this moment, and say, what were we frivolously spending on? How can we create a better budget to plan more for the future? I know I'm not great at that. My husband and I have had many conversations about, like, we need to start being better about planning for our future. What do we need to do? What kind of savings should we have? Do you guys have any advice, or, that people, what we should be doing now and looking at now to try to set us up for the future?
Yeah,
I think that emergency fund is huge. Scott mentioned earlier, it is, especially, as a small business owner, this is really going to hurt. It is, it's uncomfortable, but we have money put aside. So I'm not up late at night. I'm not sweating it. I'm not happy, but we'll get through it. I think that emergency fund is key.
Okay.
Yeah, I totally agree, Samantha, especially with what Scott said about that emergency fund. Because if it's all, in risky positions, if it goes down and you got to pull that out, that's a bad time to pull monies out. But if you have those safe alternatives like the emergency fund, and really what Scott said is just having a plan. The more comfortable you are with your plan, the more and longer you'll be able to wave out the uncertainty. And what Samantha said about kind of being excited to contribute to a retirement account now with it down. So for people that are contributing to their 401ks or IRAs on a monthly basis with dollar cost averaging, you kind of do hope that market goes down because you're buying shares at lower cost. So for those people, it's a great time to really stay the course, if you will, and to really double down if they've got the funds.
Scott, do you have any advice or comments on that?
Yeah, I agree. I think this is for the last 10 plus years, close to 11 years, right? It's been relatively pretty good from the economy standpoint. We've had our hiccups, right? 2016, 2013, there's been hiccups, but we haven't experienced anything like this. And I think Richard hit on something that was incredibly important to know is this is not a 2008, 2009 scenario, right? But really, that's the last thing as investors, that's the last thing we know of, right? So it's almost like PTSD, right? We think that we're having a time like that. And certainly, when I say financial crisis, again, I'm talking from our economy level. A lot of us from a household level are having financial crisis, especially here in the Myrtle Beach area. And I think it's a really, really good time to be able to take a step back and look at the household expenses and look at what's important to you, and be able to say, okay, how important is it for us to have a emergency fund that's either 6 months or 12 months worth of expenses? And certainly, again, just knowing what's essential, what's necessary, what's discretionary. I certainly say our household budget is doing quite well since Target trips have been limited, right? So, but again, on a serious note, this really, really is a great time to, again, take a step back and just say, okay, maybe for the past decade, maybe we're living in a way that we're living beyond our means, and maybe just need to refocus our priorities right now. So.
Yeah, I was just before we got on here, had Good Morning America on, and Dave Ramsey was on there talking, and they were asking him, like, what are your priorities right now? So if someone calls one of you guys, I was like, I know that you do a lot more for future planning and kind of setting people up, but if someone's in dire need of, like, my hours have been cut at work, I don't have that emergency fund, like, what are the things that I need to worry about right this moment? Can you guys answer that?
Yeah, I'll just dive in. I think taking care of, again, my priority is my family, right? So again, I think acknowledging where everything is at and knowing where you're at with things. And then I think a huge thing right now is just a lot of perspective, right? We are at home. This is a perfect storm, right? We have nothing else to do but to sit at home and look at the results of what is happening from a pandemic level to the economy and to the market level, right? So this is perfect where we sit at home and we watch, TV or we sit on social media. And again, I think it's very, very important during times like this to be able to create our own perspective and not allow ourselves, which is incredibly easy to do, again, to go down rabbit holes. And so I think right now, again, this is going to be a really big wake up call for a lot of us, again, what our priorities are. So, if you don't have an emergency fund, now is the time to start doing that, or to start taking steps or plan to be able to do that. And like Sam said too, if you haven't put in for retirement, great times to be able to do that during times like this, because we know it's not a matter of if, it's just a matter of when in the timeline. And that's where we don't have a crystal ball, but we know things are going to come back, right? We know this is temporary, and we know that our economy is incredibly resilient. I mean, you think about Y2K, right? And now I know I'm going back, but you think about Y2K. People thought people were buying 5-gallon tubs of peanut butter, right? It's just like the toilet paper of this era. The people are, again, there's a lot going on. 2001, 9/11, bricks from the World Trade Center actually fell on the New York Stock Exchange, and we saw a recovery from that. So again, it's just, again, about putting in perspective, have the confidence and know the opportunity.
Hey, Scott, I actually love peanut butter. So where do you get those 5-gallon things, man?
Yeah.
At Costco, if you can fight the crowds, right?
Okay. Yeah, I think it's what a great time to be in a financial type of business via taxes, mortgage, financial advisory firm, because like you said, Stephanie, as people have time to sit back and look at their money. It's like my brother-in-law is a dentist. Well, they literally shut him down, for a couple of weeks. Like, hey, do not go in there and let us sit. And it's an absolute emergency. But, typically now is and I bet Scott and Samantha and even you, Stephanie and Richard, y'all can attribute it to people are calling. People are concerned about their money and want to know great direction. So it's a good time to be able to just help people the best we can, for sure.
When I say
Sam, you wanted to touch on that.
you mentioned Dave Ramsey. I heart Dave Ramsey. And when you're talking, making these plans, if we're sitting around, we have more time with our families and with our others that we make those plans with, take a look at your debt, see where you are, do you have things that you should be paying off? Since we're not spending that money on other things right now, put a little towards that emergency fund, to a little towards that debt. And then in the end, we're all in a better situation at that point.
Yeah, I agree with that. I think that, it's a time that everyone can look at it. I think right now, if you're in dire needs, you look inside your four walls, you worry about your family, your food, and, your shelter. And, those are your things that you need right now to survive. But this is a great time to make that plan, which is, fantastic to really kind of sit down and go through all that, have the conversations that are uncomfortable with your spouses, have the conversations like, you go through, and I know, Scott, you and Aaron go through this, and it's like, you spent this here and you spent that there. Like, why are we spending this there? Like, I'll come home for a peanut butter and jelly sandwich, and my husband will go to, lunch somewhere. And I'm like, wait, why'd you do that? But then I'll go to Target and he won't. So it's a balance. But if we work together to kind of limit those extra expenditures, which we now know that, we need to take all of that, put it towards savings so that we're in a better place, coming out of this for sure. We are kind of nearing towards the end of our call, but I wanted to kind of get a few common mistakes that you guys want to give that people like to avoid right now, or misconceptions. And then I'll get your last words of advice after that. Whoever wants to take it first. All right, Richard.
I'll start, since I kicked myself off by accident there for about 10 minutes.
Welcome back.
Yeah. So Samantha and you guys, if you guys want to re-say what you said, so I can hear it. I'll have to actually go back and watch it, just because I've been getting a lot of good tips from you guys. By in no means am I a financial advisor or person. I feel, it's funny. I went to college at Coastal in 2001, started out as a finance major. And after my first year, I was like, this is boring and hard. So I'm dropping out. I became a fitness, health promotion degree, got into personal training. And then now I'm in the mortgage business. It's funny where life takes you, but I'm learning a lot on this. I really do appreciate all three of you guys hopping on here. I think that for me, what's really cool about this whole situation, because I always try to look at the positive side, don't be blind to the negative, but what can we do positive, is it allowed me to take a step back and look at my financial situation. At the beginning of the year, we always have goals. Most of them are like, oh, what do I want? You write it down. That's it. You don't really put too much thought into it for most people. But now it's like you got all this time and you have all this uncertainty. You actually sit down and you're like, wow, why do I have this credit card debt? Most of it was for unnecessary purchases. So now I'm paying interest and have all this debt on unnecessary purchases. So, and then also, I see it all the time in the mortgage field, because we're looking at people's finances. They don't have a lot of savings saved up. Normally they're using everything they have just for the down payment. And most don't have a retirement account. So it's a good time for people to take a step back and say, okay, do I have anything set up for retirement? Do I have anything set up for the rainy day fund? Because we'll bounce back from this. But let's not be foolish enough to think that something won't happen again in the future, whether it's 5 years, 10 years, however many is going to happen again. We can be set up for the next one. And so that's what I'm doing. I'm taking, looking at my financial fitness, if you want to call it that, I'm taking a look at my physical fitness because I'm rating my snack drawer and I'm not doing the best job there. So I'm having to say like, hey, wait, hold up. What am I doing? I don't want to come out of this thing 10 pounds overweight, from this quarantine. And then also the spiritual fitness, because I'm doing so much more stuff with my kid, devotionals, stuff like that, which is just like, wow, I didn't expect that to come out of this, but it's been freaking phenomenal. So I think it allows people to take a step back and take an account on where they are physically, financially, spiritually, relationally. A lot of people are realizing that, hey, maybe I'm not as much as an introvert as I thought because I miss people. So, it gives us time to build relationships. So I think people, there is negative, don't be blind to it, but focus on the positive so that when we are through this, which we eventually will be, we're all in a better situation.
I'll say when you're looking at if you need money, don't panic. Look at the day-to-day stuff that you're spending, focus on what you do need. For those that are going to be on unemployment, please have taxes taken out, because if you don't now, you're going to need it later. If you have to take money out of somewhere or tighten up, first look at what you're spending day to day. Don't immediately jump for that retirement account. I'm tossing to you guys next, because if you're under 59 and a half, you're going to have not only the income tax liability, but also a 10% penalty. And for some people that will crush them. Don't do it. Don't panic. Tighten up day to day first, then, take a deep breath before moving forward. Toss to you guys.
Yeah.
I miss Richard being on there because he came back and dropped the gauntlet right there, man. I loved it. And, but so true with what Samantha said. If you're under 59 and a half, try not to take it out of the pre-tax accounts. I do believe, and I won't talk much about it because I don't know, but I do believe they increased the limit. You could take a loan out of your current 401k. I think that's one of the things without that penalty. But really what's interesting about the financing is that there's no perfect product. There's no perfect product, and money is so gray. Should you pay off your home, or do you get could you invest it and get a higher rate of return? Well, a lot of that depends on your emotions and your risk tolerance. So there's no perfect financial product. I think everyone agrees the emergency fund, especially Dave Ramsey's big on that too, is the number one key, especially in times like this, and proves why.
Scott, bring it home.
Yeah. So again, collectively, what everybody has said is control what you can control, and know that there's uncontrollables out there. One of that being the market, one of that being the coronavirus. And again, the lifeblood of investing is the decisions that people make during these down markets. It's pretty easy to keep on track and to invest and to keep your goals in mind when everything is up, like the last 10 years. The hard decisions come when we see market volatility like this. Even if I sit here until I'm blue in the face and I tell all my relationships here, this is normal. This has happened before. This will happen again. So it's all about understanding and knowing where your portfolio is at and understanding your risk tolerance. A lot of us in the last 10 years have taken on probably a little bit too much risk that we're comfortable with, that led to us to make those short-term irrational decisions. So I just think the biggest thing right now is just acknowledge where you're at, get some perspective, get some confidence, and know that if you have a plan in place, it's going to work and it's going to come back. And then be able to take advantage of some of this opportunity that we're seeing from the stimulus to the market. And again, maybe having that conversation with an advisor to sit down and say, okay, this is where I'm at. This is what happened. Are my goals still on track?
Yeah, that's great advice. I mean, it's one of those things you want everyone to be okay, but you need to make a plan in that to be able to be okay, right? So we're trying to kind of figure out, this unstable ground, but we do know that there is stable ground below it, and we're going to reach it. So I want to just give you guys all a moment, because this has been so insightful to me. But I want to make sure that everyone knows where they can find each of you in case they have further questions and they want to really start these plans and get them in place. So I'll let you start, Reid. Just kind of tell people where they can find you, or if they want to ask any furthering questions, what's the best place to reach you?
Yeah, so I'm on the social medias, Reid Mathews. We've got our berryfg.com website. We are doing a webinar series, so everybody is staying virtual, no doubt about it, at least for a couple weeks. So the webinar series, if you're interested in more information on that, we've got a social media page and all that good stuff. And what Richard said was talking about the spiritual growth as well. I am a believer in Jesus, no doubt about it. I saw a statistic not long ago that a lot of people, more people than ever, are actually watching church, being able to watch it virtually now. So what a blessing and a gift for technology. I think, the Lord is in control through all this. And listen, I appreciate all y'all giving me a ton of value today.
All right, Scott, I think we lost Samantha there, so I'll add hers, but go ahead and tell me, where can we find you, Scott Dietrich?
Yeah. So Edward Jones, obviously we're not doing face-to-face appointments right now, but certainly you can find us on edwardjones.com. You just plug in Scott Dietrich, and then our phone number is 843-449-9660. I'm doing it every other week, WebEx for my clients. If you want to be a part of that, definitely reach out and let us know. And again, clearly my physical fitness, I have that intact, so I'm not really worried about that. So, but again, there is a lot of uncertainty and just a lot of doubt out there right now. And the biggest thing I've been telling folks, again, don't listen to family and friends or the TV. Make sure you know where you're at and stick with your goals and be confident in that. So.
No, I love that. It just puts it right there. There's so much negativity. I know, my husband and I, he's like, let's just shut the TV off, shut the news off. We don't need to hear it. We know what's happening. There's nothing, if we have news, there'll be alert come through our phones like that. But there's times that we don't want our kids to be worried. We don't want everyone, to be always. And I know that, kind of runs through your head, like the numbers climb, this climbs, that kind of stuff. You just got to kind of shut it out and kind of concentrate on yourself, whether it's, go take a walk outside, do something for your fitness. Samantha, I'll throw it over to you. I was going to give it to you, but you can let people know where to reach you if they have further questions on any of the things we talked about today.
Absolutely. So we own Liberty Tax Service in Carolina Forest and Surfside Beach. So we're in the Kroger Shopping Center in Carolina Forest and the Foodland Plaza at Glens Bay and Bypass 17 in Surfside.
Okay. And you're not taking walk-ins right now, or
yes, yep.
Oh, you are. Okay, so
yep.
if you need to, you can walk in there. If they don't want to come in, can they reach you in a virtual
Yeah, we've got
way
lots of options. Yeah, we've got we're taking walk-ins, appointments, obviously, and then we do have a remote capabilities. We can do it completely over a secure server file server, so they don't have to come in if they're not comfortable in coming in, and we encourage that. And for those that do come in, we're wiping down everything between every customer and all that as well.
That's great. Keep everyone safe. Richard, I know, most people know where to reach you, but if you want to throw that out there.
Yeah, they can go to revolutionmortgage.com, search under loan officer, and they can see me and all the other great loan officers we have here in the Myrtle Beach area. Obviously, we're all over social media, so they can find us on Facebook and Instagram. And I appreciate, Scott, you saying not to listen to people. I'm not going to take my stock advice anymore from the social media influencers on Forex trading, I guess. I thought I was going to make $1 million today, but I guess I give up.
You just didn't time it right, man. Next week.
That's great. Well, I really appreciate all of you. Does anyone have any last minute bits of advice before I wrap it all up?
103 days left. There you go.
Yeah.
You can always count on Samantha for that number. Every meeting I go to with her, and I really do count myself lucky to call each one of you friends. I appreciate, what you do even in my life and advice that you have given me. But yeah, I laugh is every meeting that we're in, Samantha has that number down, I'm sure. And now it's climbed. It was going down and then it climbed. Yes. You're hanging there, girl. You got this. That's
a volatile whiteboard you got, Samantha.
Yes, it is.
Exactly. So I just want to thank everybody for tuning in today. Everyone that's watched this, going to watch this on the replay. You guys have given us some invaluable advice and resources to be able to reach back out to you. I'm really excited. I'm enjoying doing these, meetings with extraordinary minds because I've been learning so much. So I really hope all of our viewers have as well. We are going to continue to do these. So next week we'll have 2 more editions. Tuesday is going to be a self-care edition, which we all kind of touched on a little bit. We're going to have a great psychologist on. We're going to have nutritionist, someone in the yoga field to kind of give us some tips on how to really not to internalize all of this and to get through this as healthy as we can. So we talked about our financial health then. We're going to talk about our physical, mental, and emotional health then. So until Tuesday at 9:00, I'm going to sign off and say thank you all for visiting us. Please stay safe and stay home. You all have a great day.
Bye, Stephanie. See you guys.